Howdy folks, it's Dr. Jeff Camarda with another word from Jeff. This one called Seasonal Stock Market Risks. Should you sell in May and go away? The tides of May are indeed on us. May marks the beginning of the dreaded summer swoon in financial markets, a period not ending until October, when stocks and other instruments of their ilk have historically posted poor returns, at least often enough to get the reputation that the summer stinks for stocks. The expression is said, by the way, to come from the merry old English habit of the City of London's financial barons lighting out of the hot city on horseback and in carriage. The expression is so old to catch a good, cool country breeze for a spell, don't you know? These days, the masters of the universe head to the Hamptons, or still tonier tableaux, but the underlying rationale is the same. You can't pay good attention to your assets if you're parked in the sand with a drink in your hand, so the responsible thing to do is go to cash until the summer's over and you're the master of your destiny once again. Certainly the off-again China deal jolt to the stock markets in early and mid-May now has given new credence to the sell in May cult. Now, whether this is a self-fulfilling prophecy induced by the selling pressure implied by this theory, or for other reasons, this lazy, hazy, crazy days of summer effect is well documented and has been quite reliable for at least 6 decades or more. Of course, as our technicians want to say, the trend is the trend, and the trend is your friend, at least until it isn't. Which of course is just to say that things change constantly and unpredictably. So the Swiss watch predictability of the sell in May effect seems to have ended in 2013, and investors getting out of the market during the summer in at least a few of the past couple of years have had cause to cry in their beers. Longer and different study periods have dumped cold, iced, cooler water on the sell in May oracle, finding high summer, June to August, to have been one of the most profitable and predictable investment periods of the year for a period stretching back to early in the 20th century, almost 100 years ago. Go figure. Perhaps the factors affecting seasonality have changed, or perhaps, and stake me on the ant pile in this camp, perhaps the obviousness of seasonality is merely a chimera, just an artifact of the human brain inferring patterns where none exist, as it is wont and even hardwired to do. In other words, you can't time the market, past returns are no assurance of future results, and trust in the Easter Bunny, but buy your own eggs. So what's a sober or vacationing investor to do? Stay the course, of course, stocks for the long term and all that. But given the somewhat frothy valuations lately sported by S&P 500 type United States stocks, in particular of sunny late, we suggest one be especially attentive to fair value and try hard to avoid overpaying. That means do the homework, even if it involves math. In times like these, ask yourself, what would Warren Buffett do? While we at Camarda admit to being somewhat less than oracular, Camarda has been laser focused on value for some time, and particularly in our Caesar individual stock portfolio. So hopefully that's some comfort to you as we ride the surf, the breaking surf of early May. Hopefully things will smooth out, and the summer will be one of those profitable periods that just fluster and confound the sell in May crowd. In any event, until next time, happy hunting, stay cool, and enjoy all that soda and pretzels and beer. This is Dr. Jeff Camarda signing off.